If you own an S-Corp and you are filing taxes this year, there is a form that you need to know. And that is the form 7203, okay? Most business owners, unfortunately, are not aware or are not informed about, first, what this form is, number two, what it does, and number three, the importance of doing it correctly. So today, I want to talk about this very important form, the form 7203, what it does, how it works, and why it is so important that it's not only done and included as part of the taxes for an S-Corp, but that it is done correctly and that it's filed properly, okay? So just to give you some background, the form 7203 is the form where you calculate and where you maintain and where you report the S-Corp, the tax basis for the owners, okay? Essentially, it's where you monitor how much of the S-Corp you are able to deduct, how much you have contributed, how much you have distributed, and what the final basis that you have and that you're allowed to have as part of the S-Corp, okay? So it triggers, it tracks, you know, how many taxes you've paid. It tracks how much distribution you've done to you as owner or to the other owners, how much you've contributed. It just gives you the lifeline of what the S-Corp and your investment, if we can call it that, is into the S-Corp, okay? This is what's gonna trigger, this is kind of what's gonna be able to tell, it's gonna give you the pulse, right, of what the S-Corp says, right, as a business entity, and then what you as the pass-through receiver of that S-Corp, what you're able to do with that information into your personal taxes. Okay, as we all know, and as you probably kind of already aware, and if you're not, you should definitely talk to your CPA about this, is that an S-Corp is a pass-through entity. What that means is that the S-Corp does not pay taxes itself. It passes that responsibility into the owner or owners of the S-Corp based on their ownership amount of the company itself, okay? So it is crucial that not only this form is included in the taxes, but that is reported correctly, okay? And one important note that I wanna add here is that this form is very important that it's also done correctly from the beginning, because this is one of those situations, this is one of those forms that it is crucial that it's basically the continuation of the balance from the beginning, okay? So it's one of those that, you know, you may come in on year 5 and try to get start from there, but it's one of those that it's important that you know that you do it right from the get-go so you're able to maintain a balance that is correct. It's the accumulation of what you've done in the S-Corp from the beginning. So it's, you know, at best case, you're sort of kind of doing some guesswork if you're starting with a balance on year 4 or year 5 without kind of getting into either going back from the beginning to try to figure this out or start from scratch, let's say, right? Which is not the best case because you may be losing on some benefits if you do it that way, okay? So very, very important that this is done correctly from the beginning, okay? And then one thing that is also very important to note is that this is one of those things that can trigger the IRS, okay? It can create certain red flags for them if what you turn if you provide us a 7204, it doesn't make sense, right? It's done incorrectly, doesn't follow what has done in the past, doesn't align with the business and what it's trying to do, or with the information from the business itself. So this can definitely create problems for you, okay? So that's just the basic, right? So it's important. It gives you the pulse of the S-Corp. It tracks your basis from the S-Corp, what you've contributed, what you distributed. Just gives you the overall what your relationship from the S-Corp into your personal taxes is basically what connects the business side of your S-Corp into your personal. Okay, so I just kind of want to give you some ideas into why it is why it's so important to do this form and to do it correctly. Okay, so today I'm just, what I'm trying to do is set the basics here so that you have a good understanding of, what this form does and why it's so important. Not necessarily for you to go ahead and, try to just get these, if you're not an accountant, you're a CPA yourself, to kind of, go back and try to, recreate the wheel. But it's important that it's one of those topics that as you're doing proactive relationship or service with your CPA, that is something that you discuss, right? So, if you're talking up with your CPA, okay, you did my pass through, you got my K1 from my S-Corp. So let's, did you, was all my contributions included in there? What about the distributions? Does my ending balance make sense, right? Did the income pass through correctly? How's the beginning balance? Does the beginning balance match the ending balance from the prior year? All of these are important questions that you kind of need to consider, so that then the CPA just kind of knows what they need to do, and can he knows that he needs to just kind of do some checkup and make sure that this is done correctly. Okay, so let's talk about some common mistakes, okay? And why is this form so misunderstood, okay? So the first thing is excess deductions, right? One of those things that this form tracks is the excess deductions. So those are those deductions that you put onto your business, but that they're not allowed and they're not actually allowable, okay? So this is sort of kind of like what you put together as you create the skeleton for your S-Corp. It determines what you're allowed to deduct and what you don't, right? And not only in a sense, it's not just so much that it tells you, but that it tracks, right? It keeps a history of some of those deductions that you didn't allow, that weren't allowed, right? This is one of those things that you can monitor from year to year. It gives you a good insight into some of those deductions that you're including in your S-Corp that you're not able to pass through. So it's very important information, okay? Incorrect distributions, right? Leading to tax penalties and such. So, you're only allowed a certain amount of distributions, okay? So you can't distribute more than your basis allows. Just to give you a rough example. So let's say that your basis of an S-Corp at some point, or let's say you're finished with your tax filing, let's say that your basis for the S-Corp at that moment is $10,000. But let's say that you put $20,000 distribution, you can't distribute more than your tax basis, okay? It's going to give you a negative ending balance, which it's not allowed, right? So it gives you that basically the whole scenario of your allowance, okay? And the distributions, doing incorrect distributions is gonna trigger this, it's gonna create that problem, right? So you're able, just with that example, you can see right there that you've already distributed more than you're allowed. You can't do that. So, it's one of those that basically tells you the whole purpose of the form, right? And what it does, okay? So then it leads us into the next one, which is the audit risk. As I mentioned earlier, not doing this form correctly, having negative balances, not properly identifying the distributions that you're not allowed, those excess deductions, it's going to create the audit risk, right? It's going to set off those alarms to the IRS, like say, hey, we may need to look into this one, right? And that's one thing that you always want to avoid from the IRS is, okay, let's take a further look. Because more times than not, they might, they're gonna see something that they're gonna be like, okay, so yeah, so not only I see that, there's what about that over there? What about this? So it's not like we all have something to hide, but it just creates more scrutiny, right? And then it creates more of a situation where we may need to kind of just go back, explain, use time, use resources, in case of an audit. Something that all of us want to avoid, right? And so usually forms like 1120, 1128 as the S-Corp have less audit risk, usually more than other types of filings like sole proprietorship, for example. However, not doing the Form 703 correctly is one of those that may increase your chances of an audit. So, important reason why you want to keep that Form 703 neatly done correctly by a professional CPA that can hopefully do it from the beginning, do it right, so you're allowed to kind of have the history correctly. So you're able to maintain that balance, and you know exactly how much you put in, how much you put out, and you have that balance that you're comfortable and that it makes sense. Okay, so how a proactive CPA can help you achieve this. Okay, so this is one of the reasons why having a proactive CPA is definitely going to come in handy, okay? Because it's not just someone that's going to come in last minute. Okay, so yeah, let's just get that S-Corp. Let's just give you that K-1. Go ahead and file your personal taxes, okay? So a good CPA will go back and look at your basis, okay? So that's number one. They'll go back and they'll ask you questions like, hey, do you have your the Form 7203 from the prior year? Let me have a look at that. If you don't have it, ask follow-up questions like, why don't you have it? Who was your previous accountant or CPA? Can you go back and ask them if they don't have it, why they don't have it? Those are the type of things that a proactive CPA can just kind of really help you get down to the details of around the Form 7203, given the importance of the form and then of doing it correctly, right? So so this is one of those forms that, if we're talking about contributions, distributions, income, those are things that are done that should be done sporadically throughout the year, right? It's not one of those that you want to go in, show up on March and April, and besides all the filing responsibilities that you may have, you also then will have to go back and figure out what was distribution, what was contribution. If you show up in March and April, you really just kind of you're becoming reactive. You just kind of did whatever it is that was done, that's it. You can't go back and undo, right? That's the difference, because then if you're proactive, you're able to meet with your CPA throughout the year, then you can get ahead of it. You can go in and say, okay, so this is what my ending balance was from the prior year. This is how much room I have in terms of my basis of contributions, distributions, how my net income looks like that may affect that ending balance, and there goes the planning, right? That's when you can actually go in and make a difference on your taxes by doing it proactively. Okay, so this helps avoid, just off the bat, speaking from experience from most of my clients, number one is the headache. Okay, so you don't show up in March and April just with a pack of receipts, with a pack of questions, with a pack of headaches, with the anxiety that you don't know what happened, the anxiety of surprises, how much is the bill gonna be this year, and if it is, how am I gonna cover it? So right off the bat, that's the one thing that you avoid when you do it proactively. And as you're doing it proactively, you're taking care of this Form 7203 so that you don't have to then go back on March and April and try to reinvent the wheel and figure out, number one, what took place and how it affects the 7203, but number two, that you lose out on strategies and on benefits because you did it last minute, okay? So number two, double taxation, right? So if you don't do it correctly, you may be passing through some taxes where you might be reporting it on the S-Corp level and then on the personal. You know, it's one of those things that is the double dipping, as they call it, okay? So that's one of those triggers that can cause IRS audits. This is one of those that, okay, so this happened. If this happened, then let's take a further look, because if they screwed up on this, let's see what else they might have screwed up. Right? It's sort of a natural reaction when errors happen. You know, it's if that happened, then who else? Who knows what else is next? And then even worse, let's find out. Right? That's what you want to avoid. Okay? So misreporting distributions, right? It avoids that. It avoids you reporting either more distributions that you're allowed because of the basis that I just explained, or categorizing certain things are distributions that are not. Okay, just because one of those that you show up in March, April, you're running around, you're going fast, you're looking at thousands of transactions. It's difficult to tell which one's which. You go ahead and put some guesswork into that, and then you may be creating some problems there in terms of distributions that are not allowed, that you're booking them as distribution. Okay, so that's something that you can avoid by doing a proactive look at your books. Okay, I cannot say that enough. I cannot emphasize that enough, the importance of doing this proactively. Going back to doing this stuff last minute with the headache, with running around, it's not only a bad situation for you as a taxpayer, where you're missing out, where you're not being proactive and strategic about your tax filing, but also usually for the CPA might be as well, right? I probably guarantee you that you're not their only client. Okay, and if you are, then you must be paying them really well, because CPA, they usually require, with the knowledge and with the training, it's a high-paying profession. So it's very unlikely that you're able to pay one and keep them on payroll, right? So these are guys that are out there that have all the clients. So so the last thing you want also for them is that they have all these clients doing all these things, and then you kind of fall into that trap where you just then hurrying and going really fast, and then especially if you kind of say, okay, well, I want all this done, and then I want it prior to the I don't want to file any extension, right? Which extensions can kind of just put you some benefit into that, because then it avoids kind of rushing through this thing. Okay, so do it proactively. Don't be reactive. Do all this on time. Okay, so a CPA with a tax advisory will set you up to minimize errors and get the filing done correctly for your benefit, for you. Okay, so this is one of those situations where as we see in other circumstances in life. So the more customized something is, the more that you're getting attention just to yourself, the more expensive that it is. So having said that, so if you're able to kind of get ahead of that and prioritize your situation, and then do it during the year, where the CPA can kind of work things out in a spread out. They can spread out, kind of giving you that support instead of cramming it up all in one time. You can get that customized service just for you, instead of just showing up with everybody else to the back of the line. Right? It's like, think of it as, it's you can either get to the bus early when, you can find your perfect a seat that works for you, where you have some leg room, where you're next to a window, or you'll show up like we're at the time that everybody else does, like 10 minutes before the bus leaves, and you gotta wait at the back of the line. You may not even have any luggage available for you. You're picking the worst seats available next to someone that waited for the last minute, right to the seats right next to the bathroom. Okay, so I think that pretty much compares one to the other, and I think you can clearly see the benefit of just getting these to a proactive. Okay, so some examples. I've had clients that unfortunately did not know about this form. Their CPAs did not inform them how this works, and really it's just an unfortunate situation, right? It's they either was not filed or was filed incorrectly, so it creates an additional time and cost to the taxpayer. Okay, because it's one of those that to get this stuff done right, it requires some effort, and usually effort has to be compensated. So if you go to your CPA, if you go to your accountant, and we need to go back 2 or 3 years, I don't know what was done, I need to redo some of this stuff, then it will require more work. Engagements needs to be adjusted. Agreements need to be revised. So all of this can be avoided. Number one, if you do this correctly from the beginning, if you're able to maintain that balance correctly, the accumulation of your balance, you're able to track it correctly in a way that makes sense, in a way that is correct. Or, the alternative, which is, unfortunately, if you fall victim of not knowing, then, what are you going to do, right? You were never informed, were not explained. But the key here is that you always stay informed, okay? That you, even if your business is not at a high level where you may require a ongoing daily, let's say daily, weekly, monthly, bi-weekly, whatever the case, even if you don't need that service from a CPA, it doesn't hurt you to at least book a consultation with someone who knows. It might cost you whatever they might charge an hour, $250, $300, $400. All that is nothing compared to what all of these mistakes can cost you down the line. If you accumulate all those mistakes and you add them up, that $400 that you would have paid the CPA would be pennies compared to what all this can cost you in terms of paperwork, filing correctly, maybe amendments that you may have to book, that you may have to file. Going back to prior years, like I said, you may have to hire when you could have hired them from the beginning to do it right at a lower cost. Then now you have to show up with them and ask them to go back to prior multiple years at a cost of each year, the cost to you, to go back and review, readjust, recreate, refile. All of that is going to cost you, and all that can be avoided, but it can be avoided through a proactive CPA service that can be done correctly from the beginning, and it's going to avoid all these problems for you. So, as I mentioned, I've had clients, fortunately did not know about the form, did not file correctly. All of this, so a few of them, came in with us being currently being audited by the IRS. All of these are problems, right? And problems that can be avoided. Okay, I gave you a few examples. I've gone through all of them. Okay, distributions that were over misinterpreted, right? So what are you gonna do? You have to go back and amend it, right? Because you're booking a transactions that is unallowed. Okay, so it's wrong distributions. They did not properly flow the balance, the ending balance from the prior year into the beginning balance of the following year. So those are little details that, if they're not done correctly, it's going to create that red flag to the IRS. It's going to create problems for you as you accumulate all of those balances moving forward. You may have to do an adjustment here and there. So especially as your business is growing, especially as you become more and more sophisticated and you're able to generate more revenue, all of this balance is going to become even more important for you. Because as I mentioned, that's what's going to determine what that pass-through you're able to satisfy for your own personal taxes. So the S-Corp doesn't pay taxes. All of that is pass-through, and the 7203 is key to determine how much of that you're able to get into your personal stuff. Okay, so here at Upfront CPA, we're expert at figuring out that puzzle, right? So it's one of those details that can either help you or they can hurt you. It can go either way. Rarely they go down the middle. Okay, you can't stay idle or non-participant if you don't do it right. It's not how it works. Either you do it right and it helps you, or you either don't do it or do it wrong, and it's gonna go to the side where it's gonna either help you, it's gonna hurt you financially, it's gonna create IRS audits, it's gonna you may have to hire a CPA to go back and readjust and redo certain stuff that is gonna cost you more money. Okay, so all of this being done year round, tracking your distributions year round, tracking your contributions year round, strategically planning how much that income you're tracking throughout the year, meeting with your CPA prior to year end to figure, you're closer to year end, so you will have a good idea of what your net income will be, which will affect that balance. It's key, okay? Because you may be running at a loss. And for you to be able to pass that loss down to you, you have to figure out what your balance is. You cannot pass losses past the balance that you have in your as part of your balance in the what is being tracked in the 7203. So I've thrown a lot of details out to you, but hopefully what I'm trying to accomplish here is that just get you into the habit of asking the right questions, right? I kind of want to, be that lighting guide for you to say, look, one day you think about this and say, well, I should probably, do some research. I should probably contact a CPA. It's gonna cost me whatever, for an hour consultation, but that I can save tenfold just because I'm doing it right. A lot of people ask me about AI. Should I count on AI to do all these things? And it's just like everything, right? AI can be a tool to help you achieve certain things, right? So here at Upfront CPA, we're a high-tech, high-touch firm that we use technology quite a lot, right? So one of the reasons I'm able to sit down with you in the middle of tax season and do this video for you is that we use the right tools so that we have the time not only to do this type of videos, but be able to meet with our clients so that we're able to do that proactive advisory that I'm always talking about, okay? So in order to do that, we're utilizing the, technology, we're utilizing AI, but one important key here is that you need to know how this works, okay? It's just like everything. AI is only gonna be as good as what you're able to input into the AI, whether it's asking the right questions, where it's actually questioning it, what the answer that is giving you, because in certain AI situations, I've seen it with my own eyes, sometimes it may take a different interpretation to what you're asking. You think that you're asking exactly what you want the AI to do, but it may interpret what you're asking in a totally different way and take you in a whole different path that may be unrelated to what you're actually asking. So AI can be a good tool, no doubt, but it won't hurt you if you actually get the right professional guidance so that you're able to get all these answers correctly. And you may be able to, you can even, I would even recommend that if you have some doubts about what your 7203, if it's, maybe you don't even know if it's being included, go call a CPA, just book a consultation, just, help them walk you through this and see what they can do for you. So I want to thank you folks for today's video, for joining with me throughout this very important topic. If you like this topic, if you like this conversations that we're having, go ahead and click that like button and subscribe to our channel. I'm always giving these type of discussions. As I mentioned, I like to, as we go through our clients, I always like to, bring up some of these things that are happening in the industry with my clients, with other clients, other CPAs that are, certain situations that we know that, the whole tax industry is changing. It changes year to year. Right. So this year, for example, we've seen more technology advancements, not only in the practice, but also it goes both ways. Right. So we have more technical tools like AI to help on this side of the compliance side, right? The advisory side. There's also that technology in the compliance by the IRS, right? Those guys being the ones that are looking into what we're doing, right? It's the enforcement side. So it's the compliance side and the enforcement side. So what we're seeing this year is that both of us in both worlds are utilizing AI. So what does that mean? That means that the IRS is getting more technical, more aggressive. So, we're seeing more responses to inquiries. We're seeing more audits. We're seeing more unreported income notices than we did before, because clearly they're using tools like AI to catch this stuff quicker than they did before, by having humans, having to go to each one and go and look for certain things. Now they can utilize technology to do all these things quicker and more automated, right? So that's why it's even more important these days that that you use the right professional that meets the business, so that you're able to grow, and that you're able to avoid audits, and continue with this with your business as it was intended to be, right? To make money, to pay your taxes, get the IRS off your neck, and achieve your goals as you lay them out from the beginning. So this is gonna be it for me, folks. I hope you enjoyed this video, and I'll see you on the next one.